So in the last lecture we have learned how to trade divergence accurately. For this we should always draw a support line on RSI troughs in a bearish divergence, and we should always draw a resistance line on the peaks of RSI in bullish divergence. Now in this lecture we will see how to confirm our position with the help of MACD indicator. See here, prices are going in upward direction, but RSI is giving a bearish divergence, so we will draw a support line on the troughs of RSI. At this point we are getting a signal of short selling, but we should always draw a trend line for the current trend and see if prices are breaking down this trend line or not, because it is very risky to trade the divergence when trend is moving in the original direction and we never know that it will go in opposite direction or not. It may be a simple consolidation and it can go higher from this point. So when prices are below this trend line at this candle, starting of this candle, RSI is already giving a short sell signal. So we will see MACD indicator for our confirmation. Here MACD is also giving a confirmation, so we can make our short position at the open of this candle, and our stop loss will be the recent high. This is the recent high. We will place our stop loss here, and initially I would suggest to set the target level at 1:1 risk to reward ratio, because we are trading in opposite direction. That is always a riskiest position. So see, in this case this was our entry level, and if we are making entry here, this will be our stop loss level, the high of this candle. So initially we will set our target at 1:1 risk to reward ratio. So this is our target level. When prices reach at 1:1 risk to reward ratio, then we should scale out our trade, in which we just exit from our half position and move our stop loss level to the break-even point. So at this point only half position is left with us and our stop loss level will be this. Then when there is a 1:2 risk to reward ratio, this is 1:2. Now this was our stop loss level, that is the break-even point where we made our short sell position, and this is the target level. Then we will exit from our half position from the rest position. It means now only 1/4 part of our position will be left with us. So in this way we can scale out our position and get the maximum profit. Now this was the gap up opening, and here again we are getting a bearish divergence because prices are going higher but RSI is going in downward direction. MACD is also going in downward direction, so this is a bearish divergence. Now this was a gap up opening, so we will draw a trend line for this trend, and this was the first point, this was the second point, so we will draw a trend line at this point. At this point when prices are breaking down this trend line, we are getting a short sell signal. We will draw a trend line for RSI also. This is the trend line for RSI. So at this point we are getting a signal, and MACD is giving a short sell signal at this point. So at this level we are getting a short sell signal, but we will wait for the breakdown of prices and we will make our short sell position at the open of this candle. In this case there are two peaks, so we will employ our stop loss at the high of this candle. So this is the stop loss level, and in starting we will set our target at 1:1 risk to reward ratio. So at this point we will exit from our half position and move our stop loss level to the break-even point. Now these two peaks are giving us a bearish divergence because peaks of prices are going in upward direction, but in this case both the peaks are in shaded region, they are not in overbought range, so it is very risky to trade these types of divergence. Then see, prices are going in upward direction. These two peaks are giving us a bearish divergence because RSI peaks are going in downward direction, but peaks of prices are going in upward direction. So we will draw a trend line for the prices, and here this green candle is breaking down this trend line in downward direction. RSI is giving us a signal here, and MACD is also giving a short sell signal. So we can make a short position here with a stop loss level at the high of this red candle. Now see, prices are in downtrend, and see, these are the lows, or we can say troughs. So troughs are going in downward direction, but troughs of RSI is going in upward direction, and MACD is also going in upward direction. So we will draw a trend line on the peaks of RSI, and at this point RSI is crossing above this trend line. So we are getting a signal of long position, and MACD is also giving a signal to go long at this point. But we will draw a trend line for the prices to get our confirmation signal, and see, this is the trend line for this current trend, and at this candle we are getting a confirmed signal to go long with RSI, with MACD, and with the trend line. One thing that should be noticed here, that we should draw a trend line for the recent trend. See, this was the recent trend, and we should draw a trend line for this trend. If we join these points, we are not getting any buying signal till this point. So we will draw a trend line for the recent price action that will give us a signal of buying position up to the level of this trend line. Now see, in this case prices are going in upward direction, but RSI is going in downward direction, but MACD is going in upward direction. So these two indicators are not in agreement, and if we draw a trend line for the price action, see, prices are not breaking down the trend line, so it is not a valid signal to trade the divergence. Now at this point prices are going in upward direction. RSI peaks are going in, they are not going in downward direction, but they are at same levels, so it is also a bearish divergence. MACD is going in downward direction, so we can trade this divergence. For this we will extend this trend line. This was the current trend line, and here at this point we are getting a signal of short selling, and MACD is already giving a short sell signal, so we can make entry at this candle with the stop loss level at the high of this candle. And if we measure the risk to reward ratio, this is a 4.64 risk to reward ratio in this case. Now again there is a bullish divergence. We will draw a trend line for the recent price action. Here at this candle we are getting a buying signal. MACD is also giving a buying signal, so we can go long at this point. Then this was a bearish divergence. RSI is giving a bearish divergence. This is the trend line for RSI. Now at this candle we are getting a signal of short selling because candles are below this trend line, so we can go short at this candle with a stop loss at the high of this peak. So in this way we can trade divergence very accurately if we add other indicators to the chart. Points to remember here are, we should always draw a trend line for the recent trend. We should always draw support and trend lines on RSI, and we should get the confirmation from MACD indicators. Divergence can be traded on any time frame. For positional trading, our 3D charting is weekly, daily and hourly. So we will find divergence on the lower time frame. If the middle time frame is also giving us a divergence in the same direction of lower time frame, then it will be a very strong signal to trade that divergence. So for positional trading we will see the divergence on hourly time frame. For intraday trading we will see the divergence on 5-minute time frame. For swing trading we will see the divergence on 15-minute time frame. I hope you are enjoying the course. Thanks for watching. Hello everyone, welcome back to our next lecture. Now in this lecture we will learn about multiple divergence. See, this is the hourly chart of HDFC Bank, and as we know, when we get a negative divergence, we should get the RSI peaks going in downward direction, but prices should go in upward direction. So here this was the first signal. RSI peaks were going in downward direction, but prices were going in upward direction. So this was a negative divergence, but as I have told earlier, when we get a divergence, we should always draw the trend line for the current trend, and when we get a breakout of that trend line, only then we should make our position in opposite direction. But here, as you can see, this is the trend line for the current trend, and prices are not breaking down this trend line in downside. That's why it was not a valid signal. Also, if we draw a trend line on RSI troughs, see, this is the support line on RSI troughs. So when we get a negative divergence, this trend line should go in upward direction. But here, as you can see, this support line is also going in downward direction. So it was not a valid signal to trade in opposite direction, as prices are not breaching this trend line in downward direction, and also the support line is going in downward direction. Now see, prices are going in upward direction and RSI peaks are continuously going in downward direction. So here are 1, 2, 3, 4 and 5. 5 peaks that are going in upward direction, and prices are above the trend line. They are not breaking down this trend line in downside, and 5 peaks of RSI, they are continuously going in downward direction. So when momentum is low here, because RSI is not going in overbought range, but prices are continuously rising. So what is the reason of this, that prices are going in upward direction? And the reason is there is some internal buying in this stock. So it is very risky to trade the stock when we get multiple divergence, and we should always wait for the breakout of trend line for the current trend. See, this is the uptrend, and here we are getting a breakout of this trend line. So here we could make our entry in opposite direction, and our stop loss will be the high of this uptrend, and this is the last peak, the highest peak of this uptrend. So here I have placed my stop loss level, and this was the breakout candle. So this was the selling point, but I made a short position here at this candle. But see, after the breakout of trend line, prices were going in sideways direction. And why prices were going in sideways direction? If we draw a trend line for this sideways move, we can see here prices were making a sloping down head and shoulder pattern. You can see there are multiple head and shoulders. So this was a sloping down head and shoulder pattern, that is a very strong reversal pattern. That's why prices were going in sideways range and making this pattern. And now prices has achieved the target of head and shoulder pattern that you will learn in the later lectures. And if we measure our risk to reward ratio for the divergence strategy, see, it was our selling point, and this is the stop loss level. So here prices touched this point, and it was 1:2.78 R2R in this stock. So multiple divergence is a strong signal, but it is also a risky situation. So we should always wait for the breakout of trend line when we get multiple divergence, and as long as prices are below this trend line, we can hold our sell position in this trade. So this was the concept of multiple divergence, and now we will take some live examples and see how to trade multiple divergence.